Our next guest says that the yellow metal is poised for another leg up. Todd Colvin is the Senior Vice President of Global Institutional Sales for Ambrosino Brothers. He joins me now. Todd, why is gold headed higher from here? This has been a troubling trade.
Well, Jackie, I think there's a lot of reasons why gold does what it does. It's very reactionary, and it has been here since, I guess, going back to the end of the year. We've seen beginning of 2017, we've seen gold pretty much rally. It's had a few hiccups, but ultimately right now it's the uncertainty. Not so much about U.S. growth. We saw today in the revisions that we've got some growth, and we'll find out in about a month whether we have real growth in first quarter. But ultimately, I think right now gold is looking at the macro picture. It's not just U.S. growth, it's Fed policy, it's U.S. fiscal policy, it's European elections. And I think there's a lot of things out there that are going to keep gold bid until we get confirmation. And confirmation, it could be off to the second half of 2017 before we get it. So I'm pretty much a gold buyer and holder here until then.
Well, part of it certainly is global risk, as you mentioned, but part of the gold trade also has been the Fed, correct?
Well, it's always been about the Fed, because when you talk about currency risk, you talk about Fed risk, they always end up in the gold bucket somehow. And when we see moves like we saw overnight, we saw the dollar bid overnight, and lo and behold, gold is lower today. But it certainly hasn't seen the big moves that we historically would see on a big move in the dollar or vice versa. So I think right now it's about Fed expectations, and we heard this week from Vice Chair Fisher saying the possibility of 2 to 3 rate hikes more in 2017, echoing his comments from January of 2016 of 4 rate hikes in that year, and we didn't get it. And I think the Fed right now is still seeing the economy and policy as glass half full without any real evidence. And they need to get those first quarter hard data numbers in. They need to get through some of these cloudy events coming up, like the French elections and more FOMC meetings, in order to see where policy is really going to go. Because right now gold is a safe place to go, and with equities still on all-time highs. I know we're not trading, to the dime on them, but if they're still on all-time highs, there's a big downside risk there that gold provides insurance against.
All right.